All right, so a lot happening in the crypto markets this week and really this month. Part of this is all centered around what had happened in the Ripple case, how this may affect Coinbase, and then, of course, how it's going to affect demand from institutional capital. This could roll into ETFs. You start to get the picture that this starts to have a domino effect around all the markets. So we wanted to get an expert on all these different areas to come in and talk to us a little bit more about this. We're going to dive in deep. My name is Paul Barrett. Welcome back to TechPath. Joining me today is Mike Belshe, who is the CEO of BitGo. And Mike, it's been a busy month, but thanks for coming on the show today. We appreciate it.
Thanks for having me back. It's great to be here. Crypto is always a busy month.
Well, I tell you, we were looking at just the amount of videos that were going through congressional hearings. Then we had, obviously the legal case scenario playing out with Ripple. You've got new laws and regulations that are being pitched onto the floor. You've got all sorts of things happening with ETFs. It feels like it's just a never-ending flywheel of just news and information. Do you feel like at this time that it's just a whole lot of interests starting to kind of shuttle for position here in the market? Do you feel like that's what's happening right now?
Well, look, I think crypto has captured a lot of people's interests for a lot of different reasons. I mean, I think from the retail level, people are excited about a better monetary system. From an international level, we are excited to connect markets together that previously couldn't be connected because of local jurisdictions and things like that. And so crypto is really kind of forcing us to address questions in our existing monetary and financial system that we have let go unanswered for far too long. So we hear it in politics where people are talking about what's the right level of spending, how should the Fed policy work, et cetera. Then you've got politics of, how should the US as the world's dominant reserve currency evolve going forward. There's just a lot here, and it's really important stuff. In fact, given how much time all of us spend accumulating money, and how much it comes into our consciousness in terms of how we work, our families, our personal lives, what we want to get done. Of course, this is going to be a hot topic, and the regulators are finally recognizing this is inevitable, and so they're addressing it, and that's great.
Well, I think there's obviously fuel to the fire that has started to accelerate this. Much less what happened in the Ripple case, but then also BlackRock filing for an ETF. This starts to get real players in the game in a way that Congress must almost act along with what is happening in the courts, where judges are actually coming in and say, okay, we're going to put a ruling out and let's see where it falls. I want to jump to to a story and get your opinion on this, because some people look at this as a very bad thing. Nasdaq backing out of its custody could be a bad news for crypto. A couple of things they highlighted, maybe a significant blow amid these emerging signs of life in the crypto industry. But this was something of a bit of a surprise. Were you surprised that Nasdaq stepped away from this?
Well, I mean, I didn't have any insight that it was going to happen or not, but we've seen this movie over and over again where a traditional financial player has a small team inside of that company, gets excited about crypto, starts to try to make inroads, and kind of runs into some of the usual things that tie them up. I mean, years ago, Credit Suisse, when it was still Credit Suisse, had a team that thought that they were going to be the first to do it. BNY has had a custody product. They thought they were going to be the first to do it. Nasdaq, here's another one. Look, I think the real issue is the innovator's dilemma. And, in Silicon Valley, the innovator's dilemma, it's a great book. And it's been around since, around 2000. It documents how is it that incumbent firms have such a difficult time embracing new technology. And the reality is that Nasdaq and Credit Suisse and BNY Mellon, each of them have fantastic businesses that they've been running for a long time that they know how to deal with. There's this disruptive technology that's come in, which is changing everything. They can see it coming, but the people that are running those firms today are having a real hard time of how to move to the new model without cannibalizing their existing business.
Right.
And when you overlap regulatory concerns on top of it, basically, if I were NASDAQ, I'd be looking like, look, I have a healthy business with all this revenue and low risk. And crypto is little tiny revenue with high risk. Why would I jump into that market? So when you're in a bear market like right now, it's really hard for a company like Nasdaq to jump in. Kudos to BlackRock, which is jumping full bore. Now, also don't forget, Fidelity does not get enough credit. The two largest asset managers in the United States, far and away, BlackRock and Fidelity. Fidelity's been doing this for what, 7-8 years now? Really pioneered this space, really helped grow a lot. Super glad that Mr. Larry Fink is on board at this point. He was skeptical before, like a lot of people are with digital assets, but eventually, they overcome it. They figure out what it's really about, and he is very bullish on digital assets and Bitcoin in particular right now. That's great news for crypto. Some people not quite ready. Maybe Nasdaq. All right, we'll see him in a couple of years.
All right, so that's an interesting take, because when you look at just the things that have happened over the last 30 to 45 days, the BlackRock scenario, what we've seen with now court decisions coming down, you would think there'd be a little bit more faith from institutional capital and market structures to start to move into this more aggressively. I know we already have a litany of people filing for ETFs, but when you look at that compared to, say, Fidelity, it feels like Fidelity and BlackRock have kind of isolated themselves out there on a bit of an island. Do you feel that we'll start to see more true institutional players come in much faster as things start to progress, or is everybody still standing on the sideline waiting to see what happens?
Look, the institutional players are going to come in. The clients are demanding it. I mean, that's why Fink and the asset managers are coming in now. I mean, they have that direct connection, right? And they're the ones that see that demand pulling. Now, for the infrastructure providers and the banks and the others, for them, it's less clear. They don't have that direct connection. They're providing plumbing behind the scenes, and the revenue is relatively light for them, or it's indirect for them. So innovator's dilemma, without having any regulatory burden that we have in the financial institution space, already is present for these guys. They're just like, oh, wait a minute, why are we doing this? It's too low revenue. All of these companies, they got a bottom line, they got to support, and the crypto industry is too small for them to be very interested. You overlay on top of that any sort of risk on the regulatory side, and it just makes it really difficult for them. So the regulators have taken a disproportionate response against crypto. It's political. It comes from the administration. The regulations haven't changed in the last 6 years, and yet we have a night and day different interpretation of the exact same laws between the prior administration and now, as evidenced in the OCC. Right at the end of the Trump administration, they were like, we're open for business for crypto. Let's bring in BNY. Let's bring in all of the big guys. And then new administration comes in, locks it all down. This is a very interesting problem. And so for this reason, the court decision recently, I think she got us all excited. We have a fantastic checks and balances in America. This is the best country on the planet, because we actually do have a defense against regulators that may take extreme views.
Yeah, for sure. Well, I think at least you get a note in the way, especially through the courts, where it can start to lodge into not only the lawmakers and the policymakers, but at least they get new fuel to be able to go out and really kind of position everything from new bills to also trying to coerce some of their other bipartisan counterparts to say, hey, listen, these are the things that are happening here. So for sure, if you look at what's happening with Coinbase and the SEC right now, obviously it changes maybe I'll say the complexion of the case to a certain level. Obviously, we'll still see how this plays out. I know a lot of this is more around staking and some of the things that Coinbase has been acting as, but as far as digital assets, that's going to change things up there. And then also this could bolster Coinbase's position. How does this affect BitGo right now? If Coinbase does, let's just look to the future and say Coinbase gets this situation resolved, whether it's through a settlement or through a ruling, how does that affect BitGo? Is that all good positive thing because you'll continue to maybe see a great partnership there? Or where do you see the roadmap going forward from that?
Look, I'm a huge fan of Coinbase being vindicated in the argument with the SEC. So I think it's nothing but good news. And more important than is it good for BitGo or good for Coinbase, it's good for digital assets. It's good for promoting the field that we're in. We really do have an opportunity right now to change the way the financial system works for the better. It's going to be more transparent. It's going to have less risk for all the investors out there. And so a Coinbase Win here provides clarity for how businesses evolve. How do we provide this disruptive innovation? So that's all great. There's more work to be done. Like, how are we going to build good, robust market structure, and having, in my opinion, a single vertical stack at Coinbase that is the exchange and the buyer's broker, the seller's broker, the clearinghouse, the custodian, and the bank. I think there's a lot of risk in that. So of course, I think we're going to have a market structure that provides some separation of duties. That's a little bit less efficient, but it's good for investors. I think it's inevitable that that happens. BitGo and Coinbase will figure out how to play. In the meantime, I think they're doing a great job. They've been really engaging regulators, demonstrating that companies like BitGo, like Coinbase, really want to do it the right way. The current laws aren't quite fully defined. There's a lot of interpretation, a lot of things missing. Thank you to Coinbase, frankly, for spending the money and the legal costs to go and help sort this out. I mean, as the leader, they kind of end up being taxed in that way, but it's going to be good for all of us.
Well, I mean, they are the largest exchange out there, and when you look at just custody of Bitcoin and what they've been able to do in a very short period of time, they're quickly becoming one of the stars of the industry. And if we do see some sort of light at the end of the tunnel, Coinbase is probably going to definitely benefit from what that goodness that comes out, whether it's through regulation or some sort of sweeping change within the administration that could change a lot of things very quickly. I want to talk about the size of the market, because this gets into enhanced market structure that you mention a lot. And this is a report that shows, in 2022, about $500 billion, around 448 billion. But if you look back here, this actually reached over 3 trillion at its peak in November of 2021. These are great numbers because this was all happening prior to any kind of real action on legislation, before we saw, the positive nature of the XRP and the Ripple ruling. Now you've got BlackRock and ETFs coming into play that potentially could play, or maybe not, but the fact that they're filing that already shows kind of market support. Where do you see this market going in this next bull run? What do you feel like is the real frame of opportunity here?
Look, the entire market is going to be digital assets, not 99%, 100%.
Okay.
So we already have the ability to break down a few different things. Of course, we think of cryptocurrencies, Bitcoin, of course, being one of those. We've got smart contract platforms. That's what Ethereum is. That's led to the rise of DeFi, which is decentralized ability to do financial stuff. Then there's stablecoins that have emerged. Finally, you've got asset-backed tokenization or tokenized securities. These things are just coming together. There's a few of them, like wrapped Bitcoin. By the way, BitGo offers that, $4 billion of wrapped tokens. These are going to come in a big way, whether that's tokenized real estate, tokenized securities, tokenized mortgages. All of these are happening. And what that provides is more efficient markets that are open, that interface globally, and they're completely transparent. So you can actually see where the risks and vulnerabilities are. So anyway, the TAM is absolutely huge. And in order to get there, we have to figure out, of course, how are we going to regulate these? How are we going to monitor these? What's the market structure going to look like?
Well, and there's just going to be so much innovation around a lot of these markets as we start to see growth, like you're talking about, tokenizing everything, the essence of many industrial markets out there, a lot of professional markets that are already starting to look at this. And I think even Larry Fink even talks about this quite a bit, about tokenizing everything from securities and on down. So there's real potential here. How long do you think that'll take? JP Morgan, yeah, but Jamie Dimon.
JP Morgan's got a permission-based blockchain. They call it Onyx. Mm-hmm. They're trying to bring things up on that. There's a number of companies that are working on kind of that institutional only, where they keep it kind of more hidden behind financial institutions. Figure's doing a lot. Digital Asset is doing a lot. So yeah, everything is going to be tokenized. And then, I'm sorry, I missed your question.
Well, I'm just thinking timeline. If you think about
timeline.
All of this happening, is this a 2-year, 3-year, 5-year potential where we really see major shift into tokenizing, all things out there in terms of finance instruments?
I mean, look, this just is the path forward. So all of the major firms, from Goldman to State Street to JP Morgan, et cetera, they all recognize that tokenizing of assets is the way that things are going to go. I think over the next 5 years, we start to figure out more of the regulatory components. I think over the next 10 years, we start to see the big shift across everything. And of course, this is ongoing. And the analogy to think of really is around the uproot of the internet and how it has changed our lives over the last 25 years now. In those early days, there was big .com boom. It's not too
Right.
different from what's kind of going on right now. A lot of early technology. Some of it's garbage, some of it's great, some of it's going to live, some of it's going to change, and then there'll be iterations on that. But this is the long-term future, and there's no changing that.
Why do you think we are seeing such pushback? Because when you mentioned the era of the birth of the internet, at that time, I was in Silicon Valley, and I felt like outside of the the antitrust case with Microsoft, there wasn't a lot of government pushback, at least for what we saw in terms of innovation that was happening in Silicon Valley. Versus what you see here in the crypto space, there's a lot of pushback. Granted, it's dealing with money as opposed to bits and bytes. But when you think about that, do you feel like this is something that eventually all institutional scenarios will play into this, or do you feel like this is going to have to be something that these administrations get behind and finally just say, okay, we're gonna allow this to happen?
So, like Mark Andreessen famously said, "Software eats the world." Mm-hmm. And what happened was in the 90s, we got to a point where suddenly software, once it starts to dig into a industry, it has massive change and upheaval. And we've seen this in supply chain systems. Of course, we've seen it in the internet. We've seen it in our cars, right? Software just has the ability to make it so that computers can interface to the things we want it to do much easier. The last bastion that hasn't been conquered by software, frankly, is the financial system.
Yeah, money.
You look at the very manual things that are being done in the financial system today. Sometimes tracked on spreadsheets, people doing pricing via voice. I mean, it's really old.
Yeah.
And why is this? Well, it's because power and money are the same thing. Like I mentioned earlier, we're all working so hard to get money. We care a lot about having healthy, robust trading and markets. So because of that, there is regulation. It's harder to get into it. But at this point, blockchain technology has crossed the moats of the financial institutions, where they have these big protections because of their massive regulatory advantages, and we're starting to cross over the castle walls, and we are changing the way things work. So it's inevitable. The innovation has to come, and it's going to come from all angles. It's going to come in the United States. It's come outside the United States. This is going to move global very, very quickly. And
yeah, for sure. We've seen a lot of pressure, obviously, from Europe and also Asia in really moving much faster. And we've actually reported on this quite a bit. I want to hit on something that you mentioned, is that TradFi, traditional finance, would most likely remain outside of crypto. And back to the point of Nasdaq kind of pausing for a moment, but there's others that may not necessarily be getting in the game. But if you look at this tweet right here from Will Clemente, I mean, this is Vanguard dropping in 560 million worth of Bitcoin, which is not, Bitcoin mining stock, I should say, not a bad entry for them to be able to support into the market, into traditional finance, versus saying, that TradFi would remain mostly out of crypto. What are your, do you feel like that is really going to be this next cycle? Because I kind of felt like TradFi might actually be a big part of this on at least this next bull run. What are your thoughts there?
Look, of course they're going to be a part of it, but in terms of who's going to be driving it, it's going to come from outside the existing firms, and it's because of the innovator's dilemma. We have a ETF for Bitcoin today, a futures ETF, right? The futures that we trade in Bitcoin are cash-settled futures. So I know a lot of people don't understand the difference between physically settled and cash-settled. But basically, cash-settled futures are a way that traditional organizations can have exposure to the price of Bitcoin without having to actually touch a Bitcoin. An ETF allows them to touch, again, have exposure to the price of Bitcoin without having to actually handle it. So it kind of fits on their existing rails. We're going to see a lot of this from traditional finance, where they are willing to touch crypto insofar as they didn't actually have to do the innovation, figure out what the new risk vectors are, figure out what the new possibilities are, but just run it through the existing stuff. Now, new innovative companies like BitGo are going to come in and change. And because we're going to be providing real-time service, because we're going to be providing real-time audits, because we're going to be providing services that the traditional system has never been able to touch without the digital capability, we're going to grow. And so there's basically a race right now. Is BitGo and Coinbase and the crypto technology forward firms going to grow faster, or is the TradFi system going to get in and really embrace it? I think they're going to stick to ETFs, cash settled futures, and kind of the boring stuff. They're going to try to get cash. They love cash, right? I mean, they can touch cash, but touching the digital component of it, they don't like it so much.
Well, I think you hit on a good point there in the sense that the legacy systems that have been around for so long. I was listening to a conference out of ETHCC here this last week. We kind of broke it down, and they were referencing the legacy systems still utilizing COBOL. And I thought, okay, this is showing how far back these systems are truly built on, which worries me because I think, wait a minute, this is the infrastructure that runs the planet. And we're getting ready to supercharge it. It's like you're driving a Ferrari pulling a Volkswagen.
Sure. Like the traditional finance system should not be embarrassed about it. The people working at those big firms should not feel like this is an attack. The innovator's dilemma has happened to great firms in America. It is like the natural destiny that happens. IBM was once the computer company, right? Now, they're still a big company. They're still an important company, but they are not the computing innovator that they once were. And when you go down the line, Fujitsu and all these other companies that used to have massive advantages over their competitors, and now you don't even really talk about them anymore. That's the innovator's dilemma. It's going to happen in the banking system. It's the natural evolution of business, and it's okay. So anyway, I hope nobody thinks I'm attacking the traditional financial system, because I'm absolutely not.
Well, I think it's just, everybody should, including the financial systems themselves, should want to change as innovation starts to be adopted around the world, because you're going to have a lot of these emerging markets that are doing exactly what we've already seen in the mobile networks, where they leapfrog landlines, they leapfrog the infrastructures and are moving on into 5G and et cetera. And I think that's some of the things we're going to see in blockchain for sure.
Having a 200-year lasting company is a super tough thing. Innovation is really hard. The people that are generally well suited for the 0 to 1, if you read the Peter Thiel book, the people that can build things under a new model, under a new set of risks, under a new set of regulations, tend to be different than the people that are really good at operating a large monopoly, right? So if you're operating a massive traditional exchange, you're good at that, but you may not have the right skill set for how do you embrace technology, which technology is good, which technology is not good, and figure out how to evolve that in your business without blowing up your existing business. So it's just a super hard thing to do, and we don't see that very often.
Right. Yeah, for sure. Mike, I want to ask one last question to you. You look at the scenarios that are happening right now, Coinbase and their legal battle. You look at what's happening within the ETF architecture and what might happen there, and then the regulatory front potentially percolating into possibly a House bill getting passed, even maybe as early as this month. Of those three things right now, which one do you feel like has the best probability of happening that would be good for blockchain and crypto as a whole?
I think Coinbase is probably in the best position to win their lawsuit. I mean, the ruling that came from Judge Torres was pretty clear that these tokens aren't necessarily securities by themselves. And in the case of XRP, it's not a security, it's a token. So in order to be under the jurisdiction of the SEC, it has to be wrapped in an investment contract. And selling on programmatic API trading systems is not that. So I think that there's a pretty likely extension where what was said for XRP can be applied to all of the assets that were in the Coinbase suit, and then that leads them to a win. I think it's going to take a while. By the way, I think we do need to figure out what is the right definition of security in this new context. It's just that the SEC had a hard time doing that on their own. Now the legislature needs to probably come in and fix some of that. And so I love McHenry's bill. I think this is the first pass of a bill. I don't really know enough about politics to know how likely that is to get through, but my skeptical nature says probably it's going to take a couple more iterations, and then you kind of tease all these together. And I think America comes out in a great spot. Again, I think the biggest win for Americans kind of through the XRP case is the fact that the checks and balances system that we have is so novel, so unique, and can actually help even when you've got a very powerful regulator moving in a direction that's overstepping bounds. We have a system that deals with that. Makes it really hard to invest in other places that may not have that. So talking about displacing the US dollar or the US markets as the world's reserve currency in world markets is tough because I don't think you can point to that anywhere in the world.
Yeah, I would agree. I think, the surprise that came out of Judge Torres really kind of set I think it set the world on its heels in the sense of really understanding now, wait a minute, this 800-pound gorilla is getting ready to play in the sandbox again. There may be some big opportunities here, on a global front. And I think really this is something that our audience has asked us many times is, does the U.S. have to be in the game for crypto to make it? I still believe, yes, the U.S. has to be in this game for all of the different countries and different emerging groups out there that have already started to embrace this to really flourish as a global community. I think this is going to need the bigger actors and the bigger players to definitely position at the
Look,
table.
I don't think Americans need to worry about that. Business will figure it out. We've had combinations of onshore and offshore products outside of crypto for decades.
Yep.
Pretty much every major hedge fund has offshore feeder funds, right? Which are now accepted as like just the way you do it. And what is that? That's this complicated machinery so that you can take foreign investment into US products because the US straight just coming into the US is too hard. And all the traditional financial hedge funds do this, all of them. So this isn't anything new. And yet, sometimes you hear it in the crypto context and people are like, oh my God, look what they're doing. They're trying to side skirt laws. But guys, this is what happens when you have an over-regulated space. So the opportunity right now to rethink, where the right regulation is, what really protects investors and what doesn't is going to be a good thing. Business will find a way to the market. And that's the great thing about open markets. So as long as we don't have regulation that clamps it all down, which would be a horrible mistake for the United States, Americans are going to be okay.
For sure. All right, Mike, it's been great having you on. For all of our audience out there, if you want to learn a little bit more about BitGo, just check them out over at bitgo.com, their website. They get into a whole slew of resources and tools and products. So check it out. But again, Mike, thanks again for stopping in today. We appreciate it.
Thank you so much, Paul. Great to chat with you.
All right. Okay, so you guys are tuned in maybe on the podcast side of things right now. Make sure and jump over to the YouTube channel. It's where we do a lot of our deep dives, some of the interviews. We also do some of the analysis on tokens, things of that nature. Love to get your feedback. What do you like most? Do you like our breakdowns of some of these bills? Do you like our rebroadcast of some of these late breaking news things? Or do you like token breakdowns or interviews? Tell us. Give us some comments down below. If you're not part of our Diamond Circle, make sure and get in because it's a free service. And it's our big email list. It's our private member group. You guys can jump in. It's a great place to get additional content and even chat with me sometimes. So all you have to do is click the link down below. And if you want to reach me, it is out there on Twitter @PaulBaron. We'll catch you next time right here on TechPath.